Last time we spoke was in September, and you seemed confident that spot Bitcoin ETFs will win approval. Sure enough, you were right. And now these spot ETFs are trading in the US. Now, the move is widely considered a win for Wall Street, but apparently not everyone thinks the approval of these products is good for crypto. I actually read an article where you were quoted as saying that these ETFs are stepping away from the ideals of crypto and that they could give traditional financial institutions excessive influence over the market. Can you elaborate on those points? What do you think could happen to crypto with these approvals?
Yeah, it's a great question. I mean, I think unequivocally, the Bitcoin ETFs, the spot ETFs are good for crypto. It is good to be able to expose more people to technology, good to expose more people to the markets, good to bring it to a wider audience. So I think that's all good. But I just think it's really important at the same time for us to think about the possible negative implications. It's easy to get caught up in all of the excitement, which is warranted at some level, but there are negative implications. And for me, I think the biggest negative implication is that the core promise for me of crypto, of Bitcoin, is this idea of self-custodial products where you have ownership of your own money. That is the whole dream of the technology, is people being in control of their own money. And these ETFs, while they are great, they are the creation of a financial instrument where someone else owns your money and you have access to it in the form of, this publicly traded share on this stock exchange. And that's all well and good, but it does get away from those original ideals, which I think is really important to remember. My hope is that the industry can use the Bitcoin ETFs as sort of a top of funnel, that people can become interested in technology, hear about it, get access to it for the first time, maybe through these Bitcoin ETFs, if that's the easiest way for them to get access to it, but then go down the rabbit hole and learn about what the technology is actually about and begin to own it themselves and really use it themselves in a truer way to the core ethos of the technology. And I think what's a little bit interesting about it and different from other ETFs is that most ETFs out there, the asset that underlies the ETF is not a consumer product directly. It's not something people themselves actually need to own and use. So you think about an oil ETF. Well, sure, oil is a part of my life in that I use it for different things, but it's not a product that I would go out and want to own myself, right? You might use it for something, but it's not a product that you'd want to own. Whereas Bitcoin is a consumer product. It is a thing that people should have and own themselves. And I think if they only own it through the ETFs, then they might be missing out on some of the core promises of the technology, not the product.
So, what do you think is the solution to this negative implication you outline?
I think the solution is a couple-fold. One, as an industry, for those of us who are working in the crypto industry, which I certainly am and others are, we should be building products that are easy enough to use that someone who only has the expertise to go and buy a Bitcoin ETF in their brokerage account feels comfortable using an actual crypto product as well. And that's something that hasn't really happened yet in a broad way in the industry. There's lots of crypto products out there, but many of them serve crypto native people who are really inherently interested in the technology and want to get into the nitty gritty. And we need to see a wave of products that are usable by mainstream consumers who might get their interest caught by the Bitcoin ETFs and then want to go and use the products. The first thing is really a call to industry that we have to go and build those products. And the second thing is a call to the people who are participants in the Bitcoin ETFs and going and buying it, which is that I would hope that they exercise curiosity, that maybe they get into it because they're interested in the price or they're interested in getting exposure to the asset class. And that's great. But I would hope that many of them go and take a step further and say, well, why is this asset class interesting? Why is this technology interesting? Is this product something that I might want to use independent of my ownership in the Bitcoin ETF? And I might want to actually go and play around with this technology. And my hope is that people will actually do that. So for us to mitigate these negatives that come with the many positives of the Bitcoin ETFs, I think on one side, the industry has to build better products that are usable by mainstream people. And then everyone who's in the mainstream who's using these products or getting access to Bitcoin for the first time through the ETFs, I hope exercises some curiosity and tries out some new products.
I do want to point out that last time we spoke, you said that the move is promising for adoption as it's a catalyst for more institutional and retail participants who aren't ready to own Bitcoin to enter the space. Do you have any other advantages that you want to discuss, other things that stand out to you?
I do. I think it brings in increased liquidity for the markets, which is really important, right? More people having access to this leads to more liquid markets, leads to more efficiency in the overall system. And I think core to what Bitcoin is, this sort of digital gold asset, more liquidity is better. It allows it to be better at its job of being a digital gold. And so I think the Bitcoin ETFs do actually contribute structurally to Bitcoin in the long run, even if I would like to see ownership be a little bit more decentralized and owned by a broader set of people individually. as opposed to through these large centralized exchange traded instruments.
So what do you think is next for crypto now that these spot Bitcoin ETFs are live?
Well, first of all, on the Wall Street side of things, I hope that it does lead to more ETFs for other crypto assets, and people get access to more things beyond just Bitcoin, which I love. But I think there's many others out there that people should be able to express their opinions on. In what she wrote about the Bitcoin ETFs, Commissioner Hester Peirce from the SEC said something really interesting. She said she was celebrating the approval of the Bitcoin ETFs, but she wasn't celebrating them. And this is what she said. She wasn't celebrating the approval of the Bitcoin ETFs because she loves Bitcoin. She said, my opinion doesn't matter. I'm just one regulator. It doesn't really matter what I think of Bitcoin. But what I'm celebrating is that the American people now have a right to freely express their opinions on Bitcoin. And they can now buy into it if they want to buy into it via these ETFs really easily or not. And they can express their opinions. And that's something to celebrate, is the ability for this free market capitalism, opinions to be expressed by the markets. And so that's what I'm excited for. We're seeing this first with the Bitcoin spot ETFs, hopefully with other crypto assets as well. And my hope is that, the American public will have a chance to express their opinions in the easiest way possible for them on each of these assets from a market perspective. And so I hope there's more of that to come. And then aside from that, I would just go back to what I said earlier, that I hope the industry uses this moment as a catalyst and recognizes that these spot Bitcoin ETFs are going to lead to many new people having ownership in a crypto asset for the first time. That's really exciting. But from my perspective, that matters most if we are able to then take those people and get them, not all of them, but some percentage of them through some funnel to go and actually participate in crypto directly, owning their own assets, taking advantage of the many products that exist in the crypto industry, and being able to do more than just get the financial exposure to the asset.
Now, I want to quickly touch on Bitcoin's price. In the hours following the landmark decision, Bitcoin hit $49,000 and then dropped most recently as low as the $38,000 level. So what do you think is happening there?
Yeah, well, of course, crypto and Bitcoin are extremely volatile markets, and we have to always recognize that. It's felt a little bit over the past few weeks like a precipitous drop. But then if you go and look at prices, we're actually back at where we were just a month or two ago. When we hit $40,000 a couple months ago in November, December, it was cause for celebration. And that was just a month or two ago. And then we've come back down and people are quite upset. But I think it's important to recognize that we are actually still much higher than we were just 6 months ago. And so I think there has been a real impact there. I do think that sometimes it's hard to say how the markets respond to these things. Sometimes you see people really getting excited about the rumor of something happening and that impacting the price positively. And then it happens and, it caused a little bit of a sell-off because it wasn't quite as momentous as people may have been planning for. And that's fine too. I think it's hard to expect what the market price is in and what it doesn't. But what I would say is, we're better than where we were just a few months ago. I think a lot of that is due to the Bitcoin ETFs. And despite having a recent drop, we're still back where we were in December, which is not that long ago.
Switching gears, you actually have some news to share as your crypto payments company announced the acquisition of a stablecoin powered shopping app called Join. So what was behind the decision to acquire this app and how will you integrate it into your business?
Yeah, thanks for asking. So Beam is a crypto peer-to-peer payments product, making it really easy to transfer money to anyone, anywhere in the world, nearly instantly for nearly zero fees, and giving you the access to a global payment system, which I think everyone really deserves. It's powered by crypto on the back end, but on the front end, it's a really simple user interface and is trying to be one of these products that anyone can use. And so we've been building out this peer-to-peer payments experience, and we saw this company called Join, and they were building a shopping experience powered by stablecoins where you could go online to merchants like Amazon or Shopify merchants or all sorts of places and buy things from them with stablecoins. And we reached out because we thought it might be really interesting to integrate into Beam. You can imagine people are already using this product for peer-to-peer payments. Allowing them to also use it for online shopping when they already have funds in the account is really appealing. And we talked to the Join team. We got really excited. They blew us away. A couple co-founders, Tom Dean, Jawad Ayub, and Brad Crook, who built this incredible technology and built an incredible product. And then we looked back and said, well, wait, we just want to have this as part of Beam permanently. And so we ended up talking to them and came to a deal and acquired them. So we're using Join's technology to add shopping at online merchants to the Beam global Venmo peer-to-peer payment experience. And that's something that we think is going to really help advance this technology because it brings this element of really tangible real world use cases that people have been looking for in crypto for so long. And it's finally now enabled by all of this new technology. And so we want to launch that soon and roll it out to our users.
In a nutshell, what's your outlook for payments in 2024?
Very, very optimistic. I've been saying I think it's the golden age for on-chain payments. And if you go all the way back, and I think we spoke about this last time, if you go all the way back to Bitcoin was, the white paper was titled A Peer-to-Peer Electronic Cash System. It was about payments. That's what it was originally meant for. And it's been 15 years since the publication of the Bitcoin white paper, and we haven't quite gotten to widespread payments. There have been little flares here and there, but not anything really meaningful. And I think that's just because the technology wasn't quite there. It took a lot of innovation for us to get to a point as an industry where you can actually power payments. If you think about traditional payments over card rails or digital payments, that's taken decades of innovation to get to that level. And it took us some time as an industry, but I think we're now there. And there were a few enabling innovations. There was the advent of stablecoins, which allows people to spend using assets that are pegged to existing currencies, like the dollar. And that's really important because people don't want to spend with a volatile asset like Bitcoin or Ethereum. It just doesn't make sense. And so we needed to create stablecoins as an industry. And then we needed to create a bunch of enabling technologies that ultimately allowed us to create cheap and fast transactions that are really seamless to use, where all of the complexity is abstracted away from users. And that really happened in just the last year, in 2023. And so now I'm looking at it and saying, I think we're there. We have access to these cheap, fast transactions that are global by nature, that can move across borders seamlessly, where you don't have to deal with these different financial institutions in different countries. And that's a massive unlock. Will it instantly take over all of payments? No, of course not. The payment system in the world is incredibly efficient. A lot of work has gone into it. But I do think for certain use cases, especially cross-border payments, there's tremendous potential for on-chain payments. And I think 2024 is the year where that's going to start.
And it certainly will be very interesting to see if your forecast comes to fruition. Andy Bromberg, CEO of the crypto wallet Beam, thank you very much for joining us on Crypto World once again.
Thanks for having me. It was great to be here.